Welcome to UnAccountable, the world's okayest accounting game show podcast for product news, updates, and education. I am your badass boss of a host, Tyler Otto, and I'm joined by the badass brute, Jeremy Van Grohl. What are you writing here on our intros? Are you already trying to turn people off?
I mean, that's my usual go-to, not intentionally. But yeah, and I think we're pretending to be badasses. But hold on. First of all, if we're going to say brute, can we get the classic, I'm on the brute squad. You are the brute squad.
The brute squad.
Beat it, or I'll call the brute squad.
I'm on the brute squad.
You are the brute squad.
I made a Billy Crystal reference earlier this week to my wife. So yes, fantastic work.
Oh, love it. But we pretend to be badasses here, and this will come clear why later. But let's make it clear to listeners, we are not. Couple reasons. One, we're fighting now with Apple and Spotify podcasts because they don't think we own the rights to our lead-in and lead-out music, which we completely do.
The worst part was they started this on Dwayne's episode, which was one of my favorites. They took it down 24 hours in. You don't have access to the song. And it's like, no, here's the shoddy email from 3 years ago where we paid them $250 to use their song in perpetuity. So we're working through that right now. YouTube and Spotify taking us down.
Oh, yeah. And like you said, we both love that episode so much. Like, let's get it out to all the places. And then we're like, I can't listen to it. We're like, oh.
Yeah. And my poor assistant who's having to message me like, and it got taken down again. And let's do a version of the episode without the intro music. So if you've heard episodes without music, that's why.
We're working through it. And then maybe fail number 2. So debrief from Intuit Connect, where we got to be together and do things. And we had a fantastically planned and executed live trivia. Anchor was so nice to have us in the booth. But we maybe did not do a great job of promoting this, or I don't also think like Intuit Connect is our main target audience. And I think this like cemented that. But we had like a handful of people, like 10 of us, whatever, had a great time, had great winners, good prizes. We had fun with it, but like maybe not the audience we wanted.
I just don't think we promoted it well because at Scaling New Heights, we were blocking the aisleways with our game. And this one, we couldn't get anyone to come over. So our dear friends that sponsored our event. But before we get into it, we do have 60 seconds from our sponsor of the episode. Dare I cut over?
Let's do it.
So have you heard the news about our friends at Keeper? They got a new name now, and it's Double. It's the same team, the same product, the same mission, and they're still doing what they've always done for firm owners like you and me. They're helping us double down on the efficiency, double the capacity, and double down on the client work that really matters. If you're struggling with juggling spreadsheets, client emails, and half a dozen tabs to get through your close, you know it's not sustainable, and Double is built to fix it. Double has their live QuickBooks and Zero integration with no more need to pull spreadsheets or do back and forth with clients. And Double also offers automated client follow-ups, interactive reporting, and now fully integrated accruals and AI journal entries all in one platform. It's everything you need for your firm to scale smoothly, and it's built by a team that actually listens. Check out doublehq.com/book-demo to learn more. That's doublehq.com/book-demo.com. All right, Jeremy, to start this week, first off, can I just get on a soapbox and complain?
Why would today be any different? Let's go.
Okay, no, because I think this applies to anyone. Yes, we're accounting and tax a lot of the time, or accounting and you don't want to talk tax. But like, I want to talk finance because we do advise some of our clients on their personal finances. And I am someone that my mortgage was through Mr. Cooper at one point. Then they sold it to Cross Country Mortgage, which come to find out is the same company. But I signed up to do bi-monthly payments for them, right? My mortgage split into 2 payments a month. So in theory, you're paying down the mortgage principal faster and you're actually making an extra payment every year through this. You know, for me, it's like a no-brainer. I love the math of this, of just like paying down your mortgage faster. Well, I got in and looked at my statements and I used Monarch Money and something wasn't adding up as to why interest was going down. So I start monitoring my accounts through Cross Country Mortgage.
Yeah.
Come to find out that, and this is where I find out this is actually very common in the fine print of a lot of these mortgage lenders that do this. So dear listener, please check this for you. But they would collect my payment every 2 weeks. And then they would sit on the first payment and not apply it to the principal until the second half came in, effectively making it a monthly payment. Now you might be like, well, Tyler, but you're still making an extra payment every year. Well, when that extra payment came around and they actually had 2 months worth sitting on, they would say, hey, you're prepaid now a month in advance. So after doing this for a year, in October is when I realized this, my account said, hey, you're prepaid through December. They basically were saying, hey, we aren't going to apply this payment until December. So they were sitting on 2 months of my mortgage payment, just collecting interest and holding it in their bank account and not applying it to my principal and taking down my interest. So they were double making money on me. And when I called in and said, what the heck, they were like, well, yeah, it's in our terms. That's how we do this. You're just giving us, it helps you with cash flow because more money's coming out and then, you get ahead on your payments. But holy smokes, dude, I have felt so duped and so dumb that it took me a year to realize this.
Yeah, and that's just like shady, right? Like first of all, who besides Tyler Otto actually looks into this? And I and like just learning this, floored, right? Because you think that as a Dave Ramsey enthusiast or whatever, I'm going to pay down this debt and I'm going to get there. And like as you alluded to, that takes your total payment for your house down because you're decreasing the interest you need to pay over the course of time, but not, right?
Yeah.
So yeah, so it's almost like don't do it, but take it out of your check, put it in a savings account so you get a little bit of interest on it, and then make the payment monthly like you normally would. Ugh.
Yeah. Honestly, where we're at now is like I just went back to monthly payments, and then I keep a separate account where I hold several months of my mortgage payment ahead of time. And when that account just eventually gets high enough, because I'm no longer making every 2-week payments, I'll just make an extra one every year to keep doing it. But oh my gosh, my blood was boiling. I'm angry.
If I was going to talk to your lovely wife, what would be the estimate of number of bank accounts that Tyler Otto has under his umbrella of him personally, 5 business entities, etc.? Would you even know? Ballpark it.
I opened a Mercury account this week just because I wanted to see how it worked.
Oh God. You're
I wanted to see, so I just went and put $1,000 over there. But I did go close down my QuickBooks Cash one, zeroed it out, and so when my wife finally realizes that, where did this $1,000 go? I'm gonna be like, hey, I did close one. I got rid of it. So,
and as long as you are putting those all in Monarch, which we reviewed before, that has really good tracking of this information, fine, you can see it all, right? I can't imagine the amount you have to scroll to every single account that's in there. Crazy.
It's the same thing with investment platforms too, because I want to see how setting up an account with Fidelity works versus setting one up here. So it's you look at our Monarch and the investment section. I'm not saying we're floating in cash. I'm just saying the cash we do have is sitting in 16 accounts.
We are intrinsically well diversified just by the number of financial institutions.
It's a problem. If my marriage ends for any reason, it will be not what's in the bank accounts. Well, that could also be the problem too, but it will be the sheer number of them.
Oh, love it. Well, Tyler, I don't want to wait any longer. I am super excited about our next guest, who I am blessed to call a personal friend.
You have friends?
There are people with bad decision making out there
that will your wife, Katie.
Yeah, lower themselves to me. But I'm not going to give any further ado. Beth Carter, the Badass Bookkeeper. Welcome to UnAccountable. So excited you're here.
Yay! Thank you for having me. I'm so excited and nervous.
Oh yeah, we'll make it easy on you.
No, you already messed with me.
I know, and there's more. I made fast figures just to mess with you the whole time. For people who may not know you, which you have been everywhere lately, girl. You're on booths, you're in magazines, all over LinkedIn. They are appropriate magazines, Tyler. I saw your face. Give a quick intro, if you could, to our audience.
Sure. So I am the founder of BBA Bookkeeping. We're a CAS firm. I'm using the quotes there.
Yeah.
Because I think that word is a little silly. We do bookkeeping, really.
Yeah.
And I've started going by the moniker, the Badass Bookkeeper, kind of for fun, and it just kind of stuck. And I've got a team of about 10 we've got all across the US, everyone's remote, very similar to your firm, except for, well, we don't walk into an office, but we have a vibe very similar to your firm, which is what brought me to you, Jeremy, in the first place.
Yeah.
Was hearing you speak and talk about like your people first mentality about it.
Yeah. I'm just gonna can we just jump right in here? We got a lot of things to talk about. I want to pick your brain in all the ways. Okay. So let's hop right into fast figures.
Okay.
Welcome to Fast Figures. 10 questions, 1 minute-ish. All answers are numbers. The game starts now.
All right, we're going to dive right in. Here we go. First question. A company has $200,000 of current assets and $100,000 of current liabilities. What's their current ratio?
Oh, God. I don't even know. 2.
The IRS primarily uses the North American Industry Classification System, or NAICS, to categorize businesses. Within 5, how many major categories are there?
I'm going to go 6.
In most casinos, what is the limit on the number of times that you can split one hand of blackjack?
I'm going to say 4.
During UnAccountable's pricing perspective segment from episode 59, Jeremy noted that he will give clients this % discount on cleanup work.
Whatever it was stupid.
Within 5%.
20.
According to the AICPA Code of Professional Conduct, how many principles of professional behavior support authentic, ethical practice for accountants?
Jesus, I don't know. 25.
How many nephews does Donald Duck have?
3.
According to Ventana's Research's 2022 survey, how many days does it take a business to close their books each month on average within 5?
12.
How many times do the numbers 6, 7 in that order appear in the string of numbers from 66 to 680?
Isn't 6, 7 like a thing like that the kids say these days? Isn't that a thing now? Oh, come on. 100.
Within 6 inches. What is the average height of an NBA player?
6'10".
How many E's are there in the full name of Southern New Hampshire University's mascot?
You are a terrible person. 4.
Perfect. Oh man, yeah, like you get it rough with me. I put you through the ringer a little bit. I'm sorry.
That was mean.
There are reasons.
I'm really hoping there are good inside jokes, because I saw these questions and thought it was borderline abuse here.
Right?
Oh, I only, I've always told people that the harder I give you a time, the more I love you. So if I ever stop doing that with someone, I no longer like you. So
you just wanted to make me look like a fool. That's fine.
Oh no, not at all. You're good. So let's unpack this. There's a lot I want to cover here. So, first question: company has 200,000 of current assets, 100,000 of current liabilities. What's their current ratio? You correctly said 2. So I was hoping to give you a softball there, but maybe it wasn't.
No.
So I'm going to come back and unpack that one after the next one. So
okay.
The IRS primarily uses NICS, or the North American Industry Classification System, to categorize businesses. Within 5, how many categories are there? You said 6. There are 20 from what I've seen, but let's talk about this. So I bring this up, right? And there's a lot of us that niche, right? So Tyler does hotels and very desperate businesses. Can you tell listeners, what is your niche?
Well, maybe that's why I don't know the answer to that, is because we don't niche. Niche versus niche. I don't know. It's niche.
I like niche.
You pretentious.
No,
Easterner.
You know what I saw somebody post yesterday was the word CHIC versus NICHE. How would you pronounce CHIC?
Chick.
Chitch?
It's chic. Something's chic.
There goes a hot chick.
We don't know that word.
Chick is with a K. Come on. Anyway, it's niche. But we don't actually niche. We have a couple of industries that we don't work with, such as hospitality, and legal. But other than that, we really are all over the place. So I've seen a ton of NAICS codes.
Yeah.
But I don't know. We have the internet for that stuff. Come on.
Oh yeah, 100%. And you're gonna add nonprofits to what you don't do, right?
I don't know.
Ooh, all right.
Yeah, we've been sending you a couple because we stopped taking them for a while.
Yeah.
But one of my new employees, my new supervisor, actually has a master's in nonprofit accounting.
And if anyone wants to recommend a nonprofit to Badass Bookkeepers, they can reach Beth where?
We're fighting. So I would make an argument that you, and I know we've talked about that, you niche in the type of people
Absolutely.
that align with your values.
Yep.
So I would love it if you could kind of expand on that, right? Like how did you lean into that, and how has that served you in the industry?
Sure. So I like to say that we don't work with douchebags.
Yep.
Can I say that on here? Douchebags?
You can, but you clearly broke that rule right now.
Well, I found at the beginning of my business that I was working with certain industries, specifically that tended to not have the nicest people. And at that point, it was a lot of manufacturing. It was like R&D, VC-backed manufacturing, things like that. And very much run by, rich white dudes. And they looked to me and my firm as though we were their 1950s secretaries.
Like Mad Men?
Yes, absolutely. Yeah. Like sitting outside their office, smoking a butt at your desk, right? That's not me. I mean, I'll be vaping at my desk, but not smoking outside someone's office. And, as we continued to grow and I realized that I was really good at this and I was good at running a business, I didn't need to deal with that, and it's so sad that so many people at the beginning of their careers don't realize that.
Yeah.
That it takes you a while, or you're willing to accept more because you're just looking for the dollar and you're looking to sort of validate yourself as a business. If I could have told myself one thing to start out, it would be don't deal with that.
Yeah.
We're really tough now on, you got to be a good person. You've got to treat my staff well. You've got to treat me well. We're partners with you. We're not your secretaries, which you shouldn't be treating your secretaries like shit anyway, but you know what I mean.
Can I just piggyback on that though? Like I fired a client on Monday and it was the same thing where, they were awful to my staff, and my team members said that every time they saw a message come in from him, like they got a pit in their stomach.
Yes.
It was that bad. And of course, I fired the client and just said, hey, due to difficulty retaining staff in the industry, we're aligning our client roster with people we can deliver top level service to. And I blamed it on something like that because I wasn't going to go burn bridges and say like, hey, one of your business partners is a terrible person to work with. Spoiler alert, if they listen to this podcast, they're going to find out the truth. But
I'll tell them.
At the end of the day, it was more important for me to keep my staff happy because I was about to lose. I think I could have lost a team member over this. And then 15, 20 other clients would suffer versus let them suffer because they're not the nicest person.
100%. And, I've always said that I wanted to build the kind of business that I would have wanted to work for.
Yeah.
And to know that my staff are getting a pit in their stomach because of one of our clients, like, I'm sorry, $1 isn't worth it. There are so many good people out there. I'm not wasting my time anymore. So that's how we niche. Is really based on personality, but also cool people and also people who care about their business. I'm not out there anymore trying to convince people that they need bookkeeping. Like, we've moved beyond that. I'm out there with people who already value bookkeeping and are looking for the right partner. So
you're saying if I get on a consult with you and my first question is, what's your price? I'm not for you.
I will literally, no joke, say to you, if you are price shopping, then you are in the wrong place.
Yeah, and I like to live by the mantra, like, take care of your employees and then the rest will take care of itself. Right.
Absolutely.
So anytime we have one of these client meetings, first question I ask them is like, what is your stress or unhappiness level when you know you have a meeting with that client today? And if I get anything above a 5, be like, all right, we got to fix this, or they're immediately gone. Right. So that's a
What's
cool
the score out of 18, Jeremy?
Yeah. Yes.
Five
Yeah.
out of- okay.
Unlike Tyler, I don't beat around the bush. I will say, you don't talk to my people like that. That's unacceptable, and you need to, take some classes on on kindness and appropriateness, because that's not cool.
Basic human decency.
Absolutely.
All right. Let's go to the next one. In casinos, what is the limit on the amount of times you can split a hand?
I just asked the dealer.
You said 4. It's 3. I'm going to give you this one. There are some casinos that do 4 though, so we'll give you this one.
I've definitely done 4.
I just know you're a blackjack enthusiast.
Mm-hmm.
How did the last Vegas trip treat you?
Did you see my nails?
That's
Okay,
amazing.
there's like charms on there for cards and dice and things.
Yeah.
It treated me very well. I was there for almost a week, and I only lost $50.
Oh, nice. That's a lot of that's still good. Like if I'm good with that too. Like how much time you can have fun with friends and do all that stuff. That ain't bad.
Yeah.
That's a good rate of return. If you watched a movie paid every 2 hours for a movie theater for that same amount of entertainment time, you would have spent a lot more. So I'll give it to you.
Right.
Absolutely.
Right.
And the drinks are free.
Yeah. Amen. All right. Next one. What % of discount did Jeremy say he provides clients and cleanup work? I said within 5. You said 20. It's 10.
No, she said whatever Jeremy said. It was dumb.
That's true. Yeah, we're going to cover that one. All right. You called us out on this with a great point. Go.
Cleanup work should not be discounted.
Yeah.
Because it takes a higher level of knowledge and ability to do cleanup work than it does to do maintenance work. Additionally, it's harder to find, and maybe because of that, it is harder to find companies that will do a great job at difficult cleanup work. And it's basic supply and demand. I mean, why are you going to discount something that is harder to find and is harder to do and requires a higher level of ability and knowledge?
Let me just start by saying it's nice to have a competent business owner on a call on this program for once, because that clearly isn't. So my counter argument, and then I will say another good argument that you had to the other way, to your point. My counter argument is like, if you give me a cleanup thing and say it's 6 months, within the first month or 2, I can figure out the things and then I can quickly do the rest of them. So I get some economies of scale to do that. However, then you also could say then, and you made a great point, I think we were Marco Poloing, is like, my process would incentivize the client to just have us do it as a cleanup versus active, because they're going to get a discount on it, which I agree with you is stupid. So yeah, two points both ways there.
What do you think, Tyler?
Well, so I go both ways, because I do offer a discount
You?
for the cleanup, but you're right. I don't want to incentivize it, but it's a way to get them in the door, get my staff some work, get a quick amount of cash, and they like it. And I like Jeremy said, I don't go reconcile every month, year to date. I post all the transactions, do a reconciliation as of September 30th, and I'm caught up. So I'm not doing all the recons. If I'm getting into their property management system, I pull all the revenue for the month, and I'm not doing, month by month. I'm posting 9 months worth at once. So I do get economies of scale.
You know that. You have learned that that's how to effectively do a cleanup.
I have. All that being said, I still like your idea that I don't want to say, hey, it's cheaper to have me just do a cleanup at the end of the year. But I almost wonder if the solution lies in both. Can I have my cake and eat it too? Because you're making me wonder, do I say, hey, we'll do this, and then, as long as you stay on for 6 months, here's the credit that will be applied to your balance, but I'm not going to give it to you right now. So they have to, I don't know. My brain's turning.
No way. I don't play with credits. I
don't want to gloss over the fact that Tyler said he goes both ways.
I tried to address it, and
we acknowledge that. All right.
Yeah.
I mean, I'm rethinking this too, right? This is a great point.
Well, it's the same for diagnostic reviews. So that was another thing we talked about. I charge $500 for a diagnostic review, and some firms credit that $500 back if they sign on for the cleanup. I'm sorry, no, I'm not crediting you the work that we just did. Like, we did the work, and so we're charging you for it. We provided you with the report. We provided you with the option to take that report somewhere else or to have us do the cleanup. So for that, you pay.
Yeah, this is why often when we're talking that you have the ability to sit there and color, and Tyler and I are both like frazzled and no time and anything. Ugh, so many poor decisions.
I mean, like, both of you do hourly sometimes, don't you?
Yeah.
What is your hourly rate if you do bill hourly?
This was also on episode 59.
It was. You said 150, right?
I like how I call myself out on that, and Tyler would call me out all the time that we'll have a question and be like, dude, we just talked about this on the show. Why do you not remember?
You have a worse memory than I do.
Yeah,
so.
it's terrible.
I charge $150 for my staff's time. If they want time with me, the business owners, there's a link out there to schedule for $350 an hour. I think it's about to go to $4. And so when they reach out and they're like, hey, we need to get Tyler on a meeting, instead of saying, I'm sorry, you don't pay for that, it's like, oh yeah, totally, let's do it. Here's the link. Put in your credit card, go for it. And they're like, on second thought, we'll just meet with the team.
I want to get to that point. I mean, I do have a link for $250 an hour, but I'm also not a CPA.
Neither am I.
Oh, I thought you were, Tyler.
I never sat for it. I finished the classes, but I've got 4 companies going right now. I don't have time.
Well, guess what? I don't even have a bachelor's degree.
No. I know CPAs that don't know how to do depreciation schedules. Means jack squat.
Same.
100%. All right, let's keep her moving. The AICPA Code of Professional Conduct. How many principles of professional behavior is in practice for accountants? There's 6. There's responsibilities, public interest, integrity, objectivity, and independence, due care, and scope and nature of services.
Beth had a lot more hope that we had more integrity and principles. She went like high.
Yeah, I was gonna say my expectations were, pretty much in line with, I guess, your wife, Jeremy, in terms of
Low standards.
low standards.
No, that's good. I brought this one in just to kind of talk about how you're your authentic self with your business, and I think we kind of covered that. But is there anything else like you want to add on that one? I feel like we kind of dove into that one.
Yeah, I mean, it really, again, at the beginning of starting my business, I never wore a suit, but I definitely tried to cover up my tattoos or, things like that. And I'd try to speak professionally, and you know what? Fuck that. People started getting to know the real me, and they still liked me and they still wanted to work with me. And I started realizing, wait a second, if I want to work with people that I like, wouldn't it make more sense if I was just 100% myself? Wouldn't I attract those kinds of people? And sure enough, it does. If you don't like me, that's okay. There's tons of bookkeepers out there that might be a better fit for you. I'm not offended.
Yeah, totally.
Amen.
Yeah, amen.
Honestly, for my firm, doing dad jokes and just being like, I'm a little bit more PG than you, but definitely just leaning into the goofiness has been a game changer because it attracts people. And I've also been told we don't take it seriously enough. And it's like, good. I don't want to work with you.
Yeah.
Right.
100%. Okay, next one. Moving on. How many nephews does Donald Duck have? You correctly said 3. Can you name them?
God, no.
Huey, Dewey, and Louie?
Oh, what I was actually thinking of was what's the cartoon where they swim in money?
Oh, Scrooge McDuck.
Yeah, that's what I was
DuckTales.
picturing, was like the swimming in money.
The show does not.
He also had 3 nephews.
Did he have 3 nephews too? Yeah, because they were brothers, right? That was their uncle? Yeah, okay. I only bring this up because my crew dressed up as them. I don't know if we'll be able to see this, but they had little duck hats and duck feet that my mother-in-law, who I love, crocheted for them.
Cute.
Yeah, a little Halloween tie-in. Okay.
You've already gotten to the point where you're showing kid pictures on our podcast. dude.
No. Come on. I'm such a proud dad. All right, let's keep moving. According to Ventana. What is the Spanish for?
Ventana, window. Like see-through, like transparent.
Got it. Okay. Ventana's research. How many days does it take a business to close the books a month? Within 5? You said 12. We're giving you that. It is 6 to 7 days.
Ooh.
is what they're saying. However, this did note.
I want to know who they is.
Yeah, right.
No, because who did they interview? Like back when I worked for Vail Resorts and we had publicly stated financials, just at our local ski resort, just working on the ski side, not even the hotel side, we had 4 full-time people, probably doing $300,000 in accounting salaries just for that one division, then throw on the hotel. When I was at Montage, just our hotel, getting them done by the 7th of the month, I think we had $650,000 in payroll just on the accounting team. So yes, 6 or 7 days makes sense. When you outsource to a bookkeeping firm for $1 to $2,000 a month, no, you are not getting financials by the 6 or 7.
And that's actually a new policy that I'm putting into place for January 1st of 26 is if you want to have a locked down close date, you are paying more. If you want it by the 10th, you're going to pay this. If you can wait till the 15th, you'll pay this. Otherwise, the expectation is the 20th.
And you beat me to my question, right? Like, what is your policy? So we try to do everything by the 15th, right? And some people need to move that up because of board reports and whatnot. We're not charging them extra yet. But then we have 1 or 2 of them that are like, oh, by the end of the month's fine. And we're like, we really like you. But then again, I don't want to discount that either. Like, we're still doing all the work. And I hear discounts are stupid.
Now stop using the D word.
Yeah, I will never use the D word again.
So can I chime in here, Jeremy? Because first of all, we did the same thing. Our financials were by the 16th of every month originally. And then we realized that we always had a crunch like the 12th through the 16th. And it just sucked. And employees, no matter what, they're like, well, we got time before they're due. And we haven't heard back on this thing. So they wouldn't close out tasks that they should have just closed out. So then we started offering all our clients 10th, 20th, or last day of the month, 10th, 20th, 30th. That eased things up because now we could stagger it out. But I want to tell you both, the lesson I've learned is no longer are we 10th, 20th, 30th. We are 8th business day, 15th business day, or last day of the month because holidays, weekends, like if the first of the month falls on a Saturday, you have 6 days to close the books. If it falls on a Monday, you have 8 days to close the books. Do business days, folks, at least for that first timeline. You will not regret it.
Thank you. I haven't sent out the questionnaire to my clients yet. So any clients, if you're listening. 8th business day.
Yeah, and again, getting back to this research or whatever that's at 6 to 7. First of all, that's business days. So even in the shortest one, there's going to be a weekend there. So it's 8 or 9 days. And they did note that like small businesses were closer to 14 days.
Can I also just add one more thing? Like the way we've done it, I know you don't want the word discount, but when we do our pricing calculators, we do what is it going to cost to do your books? And then we throw in a little extra add-ons when you go from bronze, silver to gold, because gold is the 8th business day. Our calculator is we figure out the cost to do it normally. That's bronze. 1.2 multiplier for silver, and you get some extra add-ons, some more metrics. You get access to like Monarch money and some other things, and then meetings. And then gold is 1.8 multiple of bronze. And it comes with more add-ons, things that we can deliver, value, do. But, it's not stuff that's incrementally more work. It's just extra things that we can provide. And that's how we've come up with it is, hey, we'll charge you more if you want sooner financials, or you get our standard rate by the 30th.
I think it definitely helps to spread it out for the staff. And like you said, there's certain clients that they don't care. They're not even going to read their reports anyway.
Yeah.
And then there's those that have, a VC firm or a board or, whatever or a coach that they need to get their stuff in to someone else by a certain date. And I think it's totally fair to say, like, you want to be pushed ahead? Absolutely. No problem. We can do that, but at a cost.
Yeah. Yeah. And all of our clients pretty much have boards. That's why we're kind of locked into ones. But
yeah. So your prices should be higher, period, then.
Yeah, they definitely should be. All right. Next, so it was 6 to 7 days. Jumping into the next one because we got a theme here. How many times does the number 6, 7? And I know how many parents out there are like, "Are you freaking kidding me?" I've heard this all day from my middle schooler. I wasn't even done yet. Preemptive.
I know, but I'm giving you the wrong answer. Who asked this question?
I struck me as funny, and I asked my kids this, and they gave a similar answer. So, how many times does that string of numbers go between 66 and 680? It is 17. because one for each hundreds place, and then 671, 672, et cetera, et cetera.
Did you know that prior to looking it up?
No, but I would have been close. I probably would have guessed 15 or so.
And thank you for the accounting merit here. I really love it.
It involves numbers, Tyler. And then just to wrap it back around. All right, next one. Within 6 inches, and if you were not watching the video, I loved the facial expressions as soon as I stopped there, and I was prepared for that. What is the average height of an NBA player? You said 6'10". Within 6 inches, you're right. 6'7" is the average height of an NBA player.
And you know that I used to work with the NBA, right?
In my comments, I know you used to work for a Boston medical clinic. Love to hear a short story or something about your time there.
They're really tall.
Yeah.
Yeah, no, it was super fun. I got to see the players all the time. And it was when the Celtics were killing it. I mean, it was Ray Allen, Paul Pierce, Shaq, Big Baby. Like it was insane. Best lineup, sort of almost maybe second best lineup ever of the Celtics. And I was not a basketball fan before that. And then you kind of can't not be when you're working with these guys.
Yeah.
But yeah, Shaq used to come into my office on a regular basis, and he'd have to duck to even get under the doorway to come in. And yeah, it was really cool. It was really fun. And my daughter, who's on the spectrum, her special interest has always been sports. And so we got to go to games a lot. And, you know, I'd get to tell her stories about seeing the team, but I couldn't tell her any details about it.
Mm-hmm.
Like, you know, one of the players broke their ankle and isn't playing tonight. I couldn't tell her that.
Oh, yeah. She
Right?
went and made bets on it.
So I had a lot of information in my head that I couldn't share about some stuff that could make or lose people lots and lots of money, which is why I say that I'm a vault when it comes to your bookkeeping stuff, because I've had to be a real vault.
Yeah, love it. That's such a cool experience. Okay, and last one. How many E's are there in the full name of the Southern New Hampshire University's mascot? The reason I ask this, like, you do have a degree of sorts from that college, correct?
No, I don't have a degree.
What is on your LinkedIn? I found this on your LinkedIn. Are you false advertising?
New Hampshire University, but I didn't finish.
Oh, you apparently did not get intimate with the mascot either.
No. Also, it's like 90% online school. So, like, who the hell knows who the mascot is?
Oh, I just had a laugh out of this one because the mascot's name is Petey Penman.
Right.
So there were 4.
I totally have a degree. What are you talking about?
Yeah, and I like no judgment here. Like I would much rather have somebody that's lived the life of hard knocks running with me in the firm than somebody with a degree coming out fresh. So, but I loved this that they call themselves the Penmen, and it was an homage to the accountants and clerks of colonial New England who bravely banded together to form a new nation.
No way.
We are all Penmen in some cases.
That's awesome.
All right, cool. You did what? I think we got 6 or 7. 6 or 7, right? Nice work. See, after all that.
What was the word you used yesterday? Diabolical?
Yeah, it was still diabolical. Yeah.
That was painful.
Okay. And with that point, now we are at halftime.
Building a firm is scary. We've all experienced the false starts, the 2 steps forward and 1 step back, and the tough lessons along the way. Well, no more. The Firm Foundation is a plug-and-play system to get your bookkeeping and tax firm up and running in no time flat. With Double, formerly Keeper, as the backbone of our firm blueprint, we'll give you SOPs, templates, and how-tos to get your staff up and running right away with no training from you. Sadly, our first 50 spots we opened up at a discount were gone too fast. So, good news everyone, we'll be opening up 50 more highly discounted spots on November 21st. Head on over to thefirm.foundation to sign up to get notified when it goes live, and be sure to snag your spot in the next cohort before it's gone. Again, that's thefirm.foundation. See you there.
And today's halftime, we're going to go to an app snack. I don't even know how to describe this. Like you're doing some awesome things here. and you have a webinar coming up in December where you're walking through some cool AI, pulling data, pushing it out of things. Give us a little bit of lowdown on what you're doing.
Sure. So I am currently obsessed with two things. One would be AI, just because, I mean, who's not right now, right? And if you're not, then you're going to get left behind. Sorry, Jeremy. Don't worry. You can come to my webinar and learn a thing or two.
I'm there.
Okay. And the other thing is a software called FinOptimal.
Mm-hmm.
You guys both know Tom.
Tom and Jesse were on the podcast.
He has been?
Yes.
Yeah, they like episode 30-ish a while ago.
Yeah.
Awesome.
Love those guys. They're not just like ridiculously smart, but just so fun.
Totally.
Yeah.
Absolutely. And just like kind and, you know, just really great to work with.
Yeah.
They have Accruer, which a lot of people know about. That's the sort of primary thing that they've been selling. And it's amazing, 100%.
Magic.
Right. It's so beautiful. And not only does it accrue and, you know, prepaid, whatever, deferred revenue, everything in your books, but it also creates a schedule for you. So you don't have to keep a separate schedule in our favorite Excel. That's great. But they also have what's called Wrangler. And it's basically, you know how if you're in QBO Advanced, it can have a direct connection to Spreadsheets.
Yeah, but it's garbage.
Spreadsheet sync. Yep.
Yeah. And
Yeah.
there's what, like live
Flow, data rails, Spreadsheet Genius. Yeah.
They're all crazy expensive. And Wrangler, I'm not going to give a price because it might change, but it's amazing. It's way less than you think it's going to be. I don't think they even post it on their website. But what it does is it has all the same reports that you can, not all, but most of the reports that you can get out of QBO. And it's only QBO. I don't believe they're connected to desktop, which, I mean,
Why would they?
join 2025.
Yeah, right.
Join 2020.
Right?
Yeah.
It not only pulls the data at whatever cadence you want it to. So, like, for example, if you have a client that needs a monthly closing binder, which, you know, for you, Jeremy, nonprofits, right? VC backed, you know, just investors in general, things like that, you need to do a whole monthly closing binder. And back in the day, we'd do all that in Excel. We'd pull down the P&L, we'd pull down the balance sheet, right? And have a tab for everything. And your manual tracking of your prepaids and all that stuff. So you set this up and it pulls them down all automatically. But the caveat is they only use Google Sheets.
Okay.
I am a convert. All right, remember like years ago, you guys have been in the industry for a while. Remember years ago when you said, oh my God, QBO is so awful. I am never, ever going to use it. Desktop rules the world. Were you guys part of that time frame, or am I aging
What
myself?
was it? 2014. I looked at bringing it on to the nonprofit I was at, and I looked at it, I'm like, this is pure garbage.
Horrible.
Prior to my time. Yeah.
That's how I felt about Excel up until a couple months ago.
You mean Excel or Google Sheets?
Well, Excel and Google Sheets. Sorry. Yeah.
Okay.
Like, I will never leave Excel for Google Sheets. Google Sheets is bull. I have become a convert, partly because of FinOptimal, and mostly because of AI. So the combination of the two is something I've been using constantly to create some really, really cool stuff. Example, I have a client who requires a monthly EBITDA. As you know, you cannot pull an EBITDA from QuickBooks.
Right. Yeah.
So what I can do with Wrangler is have the P&L data automatically pull down however I want it to, whether it's, you know, by class, by customer, by month, whatever. And you can have it through Wrangler set up, like have it come in, you know, update daily, have it update monthly, update like whatever. And then you can set up automations through Google Sheets formulas to take the data that comes in automatically and put it in whatever order you want. So instead of this hour-long EBITDA process that we used to do every month because they have like 10 different classes and it's just crazy, right? Now you have the data pull in from a P&L. You have another tab that you've built that has formulas that like you wouldn't have known, right? Like things that Tyler, you don't teach in your Excel class, because I know you love Excel and your Excel class is great.
That was intermediate, like beginner intermediate
Right,
Excel.
exactly. So like you can, with AI, do way advanced stuff. Like you can build macros, you can build just things that you didn't even know existed enough to even look into how to do it. Right. And so that's just like a use case that I'm using right now as an example.
Let's say the current firm owner was not very smart.
Yep.
Is interested in learning this process
The
on
client or the bookkeeping firm.
The firm owner.
The firm owner. Like, let's say their name was like booksfornonprofits.com.
Hair me. Yep. We're going to call him Hair me.
Yeah. Jerome Grolson.
Are you going to, in your webinar, are you going to walk through like an example of how you do this?
Absolutely.
Like, this is cool.
Yeah. So like, I'm kind of against, not really against, but I know a lot of people get scared of prompts. Mm-hmm. And there's this whole world of like prompt engineering, and you got to know prompts or sign up for this prompt library and, all this kind of stuff. No offense, Woodard. I know you have an awesome prompt library. But those are great in certain situations. But when you're doing something like this, that's so custom, you want to be using AI like to communicate, right? And that's what's so cool about it. So like, you don't need to know these prompts. You don't need to know how to use AI. Like you can literally upload a spreadsheet and be like, help me, this is what I want to accomplish. And so I'm going to go over a couple examples in the webinar on how you can do that. Like I've built calculators for my team that will, give them, you need to fill in these fields, and it's going to provide your journal entry that then you can just paste into QuickBooks. Thank you, Right Tool. So have I called out all the softwares yet?
I was just gonna throw that in there, preferably with Right Tool because it's so much easier.
Right. Totally.
Yeah. Cool. No, this is pretty awesome.
Honestly,
yeah,
I'm excited to learn and see how you're using it. I mean, I'm still an Excel purist only because I would argue I have never met someone faster than me on the keyboard. I never touch a mouse. And it's like, I can't do it in Google, even though I know, like, I will argue Excel hands down is better if you know what you're doing, but the ability to work with other softwares, build in APIs and share, Google is better at that. Like Google Sheets by far beats Excel on collaboration. And that annoys me because I so badly want to be that fast in Google, but I'm not yet. And so I'm stuck in the history.
Think of it again as desktop versus online, right? Like when I used to train people on desktop, I would actually physically take away their mouse and say, you need to learn how to do this without a mouse.
Oh, I remember working at the hospital, my first job, and everything was F5 and F11 keys, and you had to be good with the keyboard. Man, when you memorize it, you're good. Yeah. Man, if Google Sheets, if I could just do everything, I'd be all in. But no, I'm excited. I am going to attend your webinar December 10th. Yay. And how can people, are you going to give us a link? Should they go to badassbookkeeper.com? Should they go find you on LinkedIn? How do we get registered for this?
Sure. So they can find me on LinkedIn. It's just Beth Carter. And they can also go to my BBA bookkeeping website. It's bbabookkeeping.com/connect. And that'll give you, it's kind of like my link tree. Like it'll give you all the fun links to my socials. And the top thing is for my webinar. I'm super excited about it.
I'm too. I'm really excited to see this because I haven't dug into Google Sheets near as much as I should at this point.
So are you saying, Jeremy, that I should test you on it and use you as a test subject during?
I mean, you should definitely call out that we're going to use Jeremy as our test subject. And if he can figure this out, trust me, y'all can too. So yeah, let's call that out.
Last thing I want to throw in, I know, Beth, you weren't going to give a price. What I do want to say is people are going to go look up Wrangler. They're going to go to finoptimal.com, look at the pricing page, and it says $99 a month per company. What I will say is it also says accounting firms are eligible for exclusive discounts. Beth, I know you're like me. You call up Tom and Jesse, you say, let's make a deal. And Tom will play let's make a deal with you all day if you're bringing enough clients on. And folks, we're not talking like he'll give you $10 off. Like if you're bringing enough, you'll be really surprised at how affordable this becomes, particularly compared to the competition. So this is their one-off pricing. It's like the same thing. I rave about reach reporting. You go look at the price for a one-off company and people are sticker shocked. And then you find out that I am paying like, I think at one point it was like a 1/10 of what the listed price was per company because I have so much volume. So
yeah, even without a lot of volume, they'll make deals. Like it's so reasonable. Like I actually told my a client that I just put on it what the price was, because some clients I have them pay for it and some clients I absorb it. And I told the client what the price was and he laughed and he was like, obviously that's worth it.
this is even better though, because if you point out, hey, here's what you're going to get when you sign on with my bookkeeping or accounting firm. And you can say, you're going to get reach reporting. You're going to get these reports from FinOptimal, and look at the price they get. And now you start bundling together all the services they get through you, because you list retail and you do not reveal what your discount is. You start showing that, hey, we're super valuable what you get through us.
Absolutely.
Do you guys think that Jesse knows what Tom charges? I have a feeling he doesn't.
Tom doesn't let Jesse in on anything. Jesse accidentally dropped the name of their newest product in front of me when Tom was like giving him death daggers.
Oh, I want to know.
I mean, I can't say it here.
That's messed up.
I know. I promised Jesse I wouldn't, but Tom was just like, he was ready to kill him. It was great. That dynamic, they are my favorite odd couple ever.
Yeah, agreed.
I actually haven't met Jesse yet. I only know Tom and Michaela.
Yeah, and that whole team is amazing. All right, Beth. Well, thank you so much for lowering your standards and being here with us today. You are a pleasure as always, and I look forward to the next time I can actually see you in person again.
Yay. Thank you so much for having me, and thank you for letting me win.
Yes.
See you soon, Beth. Oh, I love Beth. Oh my gosh, she is too good to us. She's also the reason that like Jason Stats even knew who we were and was willing to come on the show. Beth just shouts out to us, so yeah, literally a friend we don't deserve. Jeremy, though, I have one other game I'm kind of excited to throw at you this week. First of all, I know you are an avid Jason Derulo fan. All those times you've traveled across the country to go to his concerts.
I do know who that is, which I'm impressed with, but I believe he also says his name, like in the beginning of every one of his songs, like Jason Derulo.
January, February, March, April, May, June. Jason Derulo.
Isn't that nice? That's like doing the credits of a movie. He really helps you out there. All the rappers, Flo Rida, Little John, they all do it. No, this week, I want to play a game with you, Jeremy, because it's the time of year of like tax planning. What do we do to lower our income? And I want to talk about the magic of the solo 401k. In fact, so much, we're going to play a game I'm calling Riding Solo. Jeremy, I want to ask you 6 questions, which I hope you will go over on.
Ooh.
About the solo 401k and its amazing benefits, but you will learn something along the way as I enjoy your ridicule. Are you up for this game?
I'm up for it. Let's do it.
All right. Let's just set the stage with a not solo 401k. But in 2025, what is the maximum contribution you can make to a regular company 401k within $5,000?
12,500. 17,500.
Are you ever looking at your guideline account? 23,500 is the max you can contribute to your 401k, regular 401k this year.
I had the 500 right. But I thought that was the married whatever filing. That doesn't matter. Never mind. Wrong. Got it.
Okay. So then next up, do you have any idea what the maximum amount you can contribute to a solo 401k is?
I'm gonna guess more. So 25 grand.
I was gonna give you a 5k window, so I will say yes, but it's actually the same number, 23,500. You'll be like, okay, Tyler, like you jumped straight into this. First of all, that doesn't sound like an amazing thing to even talk about, and you never even talked, Tyler, about what this exactly is. And there's a reason, because I want to quiz you on this, because we're gonna learn as we go. So why is a solo 401k valuable? Well, a solo 401k is for a solo business owner that wants to put some money away. Now, here's the first magic, Jeremy. For an S corporation owner that is a solo entrepreneur, what percentage of the business owner's salary can the company contribute
to the employee's 401k. So the company contributes this, not the employee contributes it. The company, as in a tax deductible expense. Is it 10%, 15, 20, or 25%?
And this would kind of like into a match, right?
This is a match.
Oh, I got more questions. Let me answer the question first. 15%.
It is 25
Wow.
friggin' percent that you can have the company match of the employee's wages to the business. That is a tax deductible expense for a solopreneur S Corp owner. Already, this is fan-friggin-tastic.
Yeah.
Okay.
But can the company do that if the owner isn't putting in personal contributions themselves?
Yes. So as long as it's 25% of the employee's wages. So you have to pay a wage. So anyone that's doing a reasonable compensation that's massively low, well, you're limited to 25% of it. But still pretty neat. Now, also, what is between the company and the employee combined? So that 25% plus the employee's 23.5%. What's the maximum amount that can be contributed to the solo 401k in a year? And I'm going to give you a 10K window here.
I'm just going to try to double that and say 57.
If you are under 50 years old, it is $70,000
Wow.
that you can put away in a solo 401k. Now it's like, Jeremy, why are you and I not doing this, dude? Like, why are we not looking at getting 25% of our W-2 as a company expense? Well, I'm going to read off several scenarios, Jeremy, and I want you to guess if this would qualify someone to have a solo 401k or disqualify them.
Okay. Yeah.
Just fast answers. You're going 50%.
Can I go with swiping left or swiping right?
Oh yeah, you could Tinder this up, man. You know? You know, if only tax strategies worked like Tinder, right?
Yeah,
Swipe
right?
left, swipe right. That's how I want to do my tax planning.
I don't even know which way is good. Is right or left good? Like you like them?
I think left is
Swipe.
good.
I think left is good too. I think swipe right is like ignoring people.
Yeah, I don't know.
I don't know. Anyway.
All right, Jeremy. First off,
Yeah.
this S Corp owner has an employee working 40 hours a week for a full year. Qualify or disqualify?
Qualify.
If they have a full-time employee, 40 hours a week, working for a full year, you cannot have a solo 401k. You are no longer a solopreneur.
So one employee, even.
One employee that has hit their year date.
Got it.
So, they haven't been there a year, you're still good.
That was going to be my question. Is like, I have employees. Can I do this? Probably not. Anyway, go on.
Okay. What if you have an employee working 25 hours a week for a full year?
Qualify you for this?
I'm enjoying this so much. So here's the terrifying thing. They have to be a part-time employee, but for this test, it's under 1,000 hours a year. That's less than 20 hours a week.
Thank you for mathing that for me. Oh, yeah. Okay.
I know, terrifying. Okay, what if I have my wife working in the business 30 hours a week for a full year?
First of all, she's going to divorce you.
Yeah, that's true.
I'm going to keep... one of these has got to be right. Qualify.
Yep. So actually, my wife can work as much as she wants. She doesn't count as an employee, even if she has a W-2. We could actually do this whole strategy. I could put in 23.5. She could put in 23.5. Then you could both match 25% for both of us. Do 70K each. Now, wouldn't it be nice to make that kind of money? That ain't happening, Jeremy. But like, holy smokes, imagine you're a solo practitioner doctor with a practice where you and your spouse run it. You could be putting 140K away a year with, what does that work out to? 60 grand as a tax deductible expense. Awesome.
Yeah.
Okay. Two more. What about my under 21 kids working 40 hours a week for a full year?
If they let your wife, they have to let your kids, right? I'm going to qualify.
Yep. As long as they're under 21. Otherwise, if the kids are over 21, they're just like any other employee. Last disqualify or qualify, Jeremy. I have an employee only working 15 hours a week, but for 3 years.
Oh my God. Why would you think of that? Disqualify. I feel like that's a trick. Yeah.
I had to put it in there. Yeah. So if you have someone that is working for you part-time, at least 500 hours a year, once they hit their 3-year mark, it disqualifies you. So you should probably fire that employee 2.5 years in and get a new one. And then, the clock resets. You're good.
Yes. Perfect.
All right.
Can you do Roth? option with this too. Is there a Roth
Sure
option?
can.
Yeah.
Traditional, Roth, it's magical. I
love it.
know.
All right. All right.
All right,
Cool.
last question. Which of the following is not true about a solo 401k?
Oof.
A, the expense of setting up the 401k is a tax deduction.
Okay.
2, I can get a first-time retirement tax credit in my business for setting this up. 3, I can create a new company to funnel my revenue through where I'm the only employee, and then I can kick off a solo 401k. Or 4, I can take penalty-free loans against my solo 401k.
I'm gonna go. You went from A to 2 to 3. I'm gonna go.
I know,
with
right?
3. I'm gonna go with 3.
Well done, sir. Yes.
Yeah.
So the one thing is people are like, well, I got a great workaround. I'll have a management company that only employs me, and all my other companies report up to it, but I'm the only employee. If you're a business owner and you have multiple companies, there is the common ownership. I think it's the grouping clause, but basically all your companies you own 50% or more of have to have the same retirement benefits. So that would disqualify this. But I think those other things I said are true or interesting because you do get a tax deduction. You can claim it as an expense. Then you can get those tax credits for setting up a retirement account.
Yeah.
Or you're the only employee. And then you can take penalty-free loans against this 401k for up to 5 years. You can do up to 50K or 50%, whatever is the larger amount. The smaller amount. And the interest you pay on that loan goes right back into your retirement account. So you're paying it back to yourself. You're not paying a bank or anything. I mean, no one talks about this, but dude, if you were Jeremy, when you and I sell our firms one day and we're just doing consulting, holy smokes, dude.
Yeah. Oh yeah. And then this would have been good to know when I was still in that place, right? When
I know, right?
I just had one part-time employee at 10 hours a week. Yeah, this would have been huge. Wow.
So all that being said, it's November, year ends around the corner, but there are still some places where if you have business owners that they have a solo S corp and they're printing money and they're trying to figure out what to do and stock that away. It's a cool little thing, I don't know. I thought it was a fun education, but I also could have bored the ears off everyone. I'm sorry if I did that.
No, I like it.
And with that,
all right, and we're going to start with winner of the week. The National Association of State Boards of Accountancy released the top 3 schools for CPA passing grades. And in order, they are number 3, Montana, number 2, hailing from our own near and dear, Utah, number 2, and number 1. Any guesses?
I mean, Wisconsin, maybe you're about to flex on me?
No, it was Nebraska.
Oh.
And then any guess with what percent? So Nebraska was number 1. What percent of pass rates did they have on the CPA exam?
52.
62%.
Okay.
Yeah,
I'm surprised. Like you, I'm going to be proud of my 2. You were proud of your 500.
Yeah, 100%. So cool. Cool to see that. I'm a little surprised too that the passing amounts are that low, but I never took the test. Tyler, we're still going to goad him until he does. So here we are.
I've just got too much going on. I really do want to finish my...
Yeah.
And our loser of the week?
Loser of the week, in case you're aspiring to be a criminal, a Michigan accountant has been charged with allegedly claiming to CPA and creating a false license for himself. Joseph Vanator. Is this like the water or the window in Spanish? What was that again?
That was Ventana.
Ventana, this is Vanator. Of this organization in East Rapids, Michigan, was arraigned with 1 count of accounting violations, a 5-year felony, according to their Attorney General's office. So that sucks, but the part of this that I love, right? So that is Joseph Vanator. The firm's owner, Jacob Vanator, who is a CPA, released a statement saying this is difficult and heartbreaking. We're doing this, but have no fear that both Jacob, the owner, and John are both licensed CPAs and fine, but their other family member, brother or something, Joseph, was fake, didn't have a real CPA, but all those J's in one accounting firm, one of them shady, bringing shade on the family.
Wow. Yeah, that I mean, if it's a family business, I don't know how you come out and just be like, yeah, I know this one shady individual. Like, no, that's blood. That's like,
Yeah.
Wow.
Interesting. How did they get away with, or like, how did he pull that off with family members in the same? I got to think it's a pretty small firm if they're all I don't know, crazy.
Well, sir, hope you have a great Thanksgiving, because I don't think we'll talk again until after that. But yeah, we're getting into the holiday season, so we better think of something festive to do.
Yeah, no Thanksgiving throwdown this year.
I know. Until then, sir, we'll talk to you later.
Sounds good.
Let's be honest, most of us didn't become bookkeepers or accountants to spend hours learning marketing systems and chasing leads. Heck, some of us became accountants because we didn't want to talk to people. We did it also to serve clients and build businesses we love. But what if you could get better clients without the marketing overwhelm? Well, that's exactly what Keepable does. It's an all-in-one marketing system built specifically for bookkeepers and accountants. And it works 24/7 behind the scenes to bring in leads, book consultations, and automate follow-ups. You get a professional website, branded consultation page, and follow-up automations all tailored to your business. No more duct taping tools together or hiring expensive marketing teams. If you want to grow your firm with ease and attract better clients without doing more work, go check out Keepable today at keepable.com or follow the link in the show notes to give us a little bit of extra credit with the folks over at Keepable.